Welcome to the Passive Income Machine podcast, where we show you how to break free from the grind and achieve real financial freedom in 10 years or less. My name is Ryan D. Lee, and I've helped thousands turn income into cash flow, trade fake money for real assets, and take back control over their time, their wealth, and ultimately their life. Each week, you'll get strategy, tools, and mindset to build your own passive income machine. So my friends, sit back, relax, and enjoy today's episode. All right, my friends. Welcome back to the Passive Income Machine podcast. You were on the microphone today with me, Ryan D. Lee, and my man, the myth, the tax genius himself, Scott Saunders. Scott, you want to say what's up to everyone today?
Hey, great to be here. Super excited to talk about what we're going to chat about today. Super fun topic.
You know what? I like that you frame it that way, that we're going to be talking about a super fun topic because your perspective determines your action. And for the longest time in my life, Scott, my perspective around what we're going to talk about today wasn't necessarily fun. It was a drag, it was punitive, it was, a necessary evil, whatever it might be. But today we're going to be talking about taxes. So, Scott, how can you equate the word fun? Because I don't believe most people wake up and say, hey, we're talking taxes, it's going to be fun. How can you equate the word fun with the topic of taxes?
The way I would do that is we're talking about opportunity, right? When we think of taxes, a lot of people think of, oh, I got to do this, I got to do that, I got to do these things. When we think of opportunities, and then maybe by doing a little bit of restructuring, we can take advantage of opportunities, that to me makes it a little fun and exciting. So we take something that most people consider static, and now we make it a dynamic planning opportunity that gets better over time. As we learn more about this subject, we get a little bit better and we find new opportunities, and it unlocks new doors that maybe we didn't even know existed. So for me, the whole concept of taxation is about potential and opportunity and learning maybe to shift things around to get a better outcome. And ultimately, what we all want, which we think we all get excited about, how do we lower our tax hit a little bit? How do we reduce that? And everybody gets excited about that, I think.
Man, that's where you bring the fun back in, is give me my money back. Before we get into the tactics of the topic today, I'd love to pick your brain on this, Scott. How did we get here? I mean, that's the question that I constantly scratch my head on is, America was founded primarily, a lot of different things, but it was founded and we went to war over taxation without representation. Now we definitely have representation. We have all sorts of representation. Depending on what you believe about the jobs report, there might be over-representation. But with that being said, how did we get to the point in America where we are paying taxes on top of taxes on top of taxes to where Americans, I don't even know all of the taxes I'm paying, but I know that the prices that I'm paying in various different aspects of my life are impacted in one degree or another by taxes. How did we get here? What's your perspective on that?
Boy, that's a hard one to unpack. I think we got here just one small little paper cut at a time, right? I think we had you're right. We were founded by not wanting to have taxes, that we didn't have representation. And Americans traditionally, we do not like paying taxes. And what happened was, I think just over time, it was just a little bit here, a penny here, a little percentage, a little bit. Income taxes, when they first came about, were just for the real wealthy, right? And then it kind of trickled down. And I think a lot of these things, you kind of open the barn door out and you do something at first which seems very like it's a small little segment, but over time it kind of grows and it expands and it creeps and it starts affecting more and more people. And I think that's kind of what's happened with taxes is, a little bit kind of grew over time, and then a little bit over here grew, and that's stacked on. And gosh, in our life, Ryan, we're going to talk about it. We got taxes everywhere you turn. They're everywhere. So I think it's become persuasive.
So as we look at this, here's what I believe. I think our financial system, it's fueled off of ignorance. It really is. It's fueled off of financial ignorance. And I don't think there's much of an incentive to change that. People ask me all the time, why don't they teach this stuff in school? Well, why would they teach this stuff in school if the more you know, the harder it makes it for this system to operate? Because the more we know, the more control we can take back over our life. And I think really when we talk about taking control over our life, it does start with money. And this is why this topic is so critically important, Scott. the human beings trade the majority of their life for money. Like there's just no way around that. I mean, we trade our time for money going to work, and I do believe work is necessary. I don't think that we should be sitting around, playing video games all day. But I do believe that human beings trade the majority of their life and oftentimes the majority of their sanity pursuing money, trying to get enough money with this elusive idea that one day they'll have enough money. And, when we understand how the tax code works, we can actually accelerate the pace of taking control over our life because we can take control over more aspects of our money. So, Scott, break down this big complex idea called the tax code, and where can an individual step in and take more control over this seemingly overwhelming topic?
Yeah, well, the topic gets overwhelming because we've got taxes everywhere, and we're going to dig into that. I kind of want to wrap up, and where there's some hope and opportunity, is we can take over control of the income taxes that we pay. When we think of taxes, most of us think of April 15th. We think of the IRS. Those are the concepts we think of taxation. That's the one area where we probably have more levers that we can pull over time that we can actually reduce our taxes. But Ryan, I did a little research, and I'm going to share some of it. It is shocking the number of taxes and where they are. I mean, do you want to take any guess how many taxes there are that we pay in America? Just you want to take a wild guess?
I don't even want you to tell me, Scott. Come on, dude, don't depress me, man. But I bet it's over 1,000. I bet it's in between 1,000 and 1,500.
It probably something like that. I came up with a list here of 100 plus taxes. And so when you think of the word tax, they're taxes. There are user fees, there's license fees, there's registration, right? There's all these little things that we call by different names, but when you get down to it, we got to pay an entity, a government entity or somebody, some money. It's a tax, but we have all these different names for it, right? Registration fees and driver's license fees and all these different costs, marriage registration. If you just think about them, they're all over, but they're not called tax necessarily. They're called by other names, right? And I just did it recently, Ryan. I just had to switch my phone bill, right? I had to do that, and I came up, this is just on my phone bill. There's a fee for other government fees, 40 cents. There's a federal universal service fund, 21 cents. There's a recovery fee, $2.10, and there's a federal cost recovery fee that's only a penny. That's just on my cell phone bill. There are 4 other taxes that I found when I switched providers just in a cell phone bill. And I don't know if we all know that all those things, I guess we feel it in our wallet, but we don't really know that we've got all these taxes that are in all sorts of common day interactions.
You know what? It does come right back to what you talked about. The way we got here is these tiny little paper cuts. Right? If the government would have come out all at once and say, hey, we're going from no taxes to 50% of your life is going to be taxed, 50% of the money that's coming through is going to be taxed, there would have been a revolt. Like we would have went right back to the Boston Tea Party. We would have thrown the ships overboard now, not just the tea, and we would have went right back to a revolt. But because they did it in little 1 cents here, 20 cents here, and it just becomes part of the price of living. Because when you look at your cell phone bill, what do you ask? You ask, how much is it going to cost me per month? Once we have that number, now we take that number and we plug that into our monthly spending plan, our budget. But that number is made up of 4 different types of tax. And if we took those 4 different types of tax out of your cell phone, now your cell phone bill goes down by $5, $10 a month. And if we went across the board and took those little teeny incremental paper cut taxes out across the board, I bet Americans would live healthily, abundantly, and it would be so much easier today. But that's just wishful thinking. So Scott, I don't know if we can you call your cell phone provider and say, hey, drop these 4 taxes? Or is that just the way it's going to be until something changes?
It's the way it's going to be. There's no way to opt out of them. These are taxes that are in there. So I can't do it with my cell phone. What about people that like the outdoors, right? I like to fish. I got to pay every year a fee, right, to have my current fishing license. Once a year I got to do that. I remember when I was a kid, it was nothing. In fact, when you're a kid, you fish for free, right?
Yeah.
When you're an adult, you got to pay a fee. But back then, it was very, very little. $5, $7, $8. Now it's better part of $40, $50 every year just to go drop my rod in a trout stream. And frankly, I may not catch fish, right? That doesn't even guarantee I catch it. That's just for the right to drop my line in the water. People that want to hunt, they do that. I mean, you just think about it. There's all these sorts of fees that are put in. You want to build a house. You got to pay sort of zoning permits. You got to pay permits for a house. There are all these things. I was looking at it recently. In my neighborhood, it costs a lot more to build here than it does down in Colorado Springs because there are a whole bunch more fees that are put in by the city and the local municipality. But all those at the end of the day, as you put on, they get passed on to somebody. The end consumer really is going to end up paying those, right? So the builder may pay the fee, but he just tacks it on, builds it into the price of a house. And you and I and everybody in America, we're really at the end of the day, they all kind of trickle down to us and we end up paying all these little fees.
Hey, it's Ryan jumping in real quick with something that you do not want to miss. The How to Retire in 10 Years Summit is coming up, and this is the event that makes everything we do here possible. If you're ready to build real passive income and take control over your money and ultimately your life in 2025, now's the time. Early registration is open, and there's an exclusive bonus waiting when you join the list. Just hit the link in the show notes or head to retireintenyears.com. All right, back to the show. Well, so Scott, I know we didn't get on here to complain, right? I mean, there's a lot to complain about for sure about taxes. Now, we talk a lot about everything we do in the investing world is framed around taxes. So let's take this idea that we are the system that we operate in. It operates off of deceit, fees versus taxes. It operates off of, lack of education, financial education, and it uses those things to our advantage, or to their advantage and our disadvantage. If you want to win in the money game, including the tax game, or maybe even beginning in the tax game, what are some of the things that you can do? If we can't catch fish for free, and we have to pay the cell phone company 4 different types of tax because they're getting charged tax, on top of the money that they're already charging us for tax, what can a person do to take more control over the tax equation instead of their life?
Yeah, what we can do for starters is start with our income tax and the money that we earn. And look at that, because money that you earn, you've got different ways you earn it. You've got different types of income, as you know, different ways to earn income. We start there with our income and say, what is in the tax code that maybe gives us some opportunities to shelter some of that income? What provisions are in the tax code that can help us out? If we step back with that and we say, okay, we can control the income tax part of it because we can't control all those other costs and fees. We're stuck with them. So now we go back and we look at the code and we start getting that financial education. We start reading books by Tom Wheelwright, Tax-Free Wealth, right? Books like that begin to turn it around and say, wait a minute, instead of looking at this as the tax code of being the enemy, it's really kind of our friend, and it's providing some planning opportunities. So let's learn about those. And then every year things get updated. We just went through a recent change in the code this past summer where things changed. Learn, find out from tax advisors and tax strategists, hey, what are some things we can take advantage of with these new opportunities and maybe shift our activity, shift our focus to better align with the code. I think that's it for starters. What are your thoughts, Ryan?
Well, I want to ask you a question on that, a follow-up, because I agree with what you're saying, and I think the interesting part about the tax game, when we start to understand it, is there's a lot of taxes that unless we want to revolt, there's nothing we can do about them. But one of the largest taxes that we have, the form of the largest taxation that we have, there is something that you're saying we can do about this. And so if that's true, why does the IRS, why does the federal government allow us to have some level of involvement and or manipulation over our income taxes? Why do you think they're doing that for us?
I think it's because when we think of the government, we're thinking of Congress. They want to get some outcomes. And I think the government steps back and says, we want to provide some incentives to get the outcomes that we want. We want to give planning opportunities. And those that kind of rise up and take the opportunity to study and find out what those are the people that get to take advantage of those incentives that are built in there. So it's a positive in a way, right? We think of IRS as being a negative, like, we just have to pay them every year. The flip side of that is, from the government's perspective, from Congress and our leaders, they want to encourage certain behaviors. So because they want to encourage behavior, they provide financial incentives. If we raise our education and learn about those financial incentives, and then we say, I can reorient and I can take advantage of this opportunity. I have a choice. I can write a check based upon my income to the IRS, or I can look in the code and say, what are some opportunities that maybe I can align what I'm doing with and take advantage of those incentives? Can I start a side hustle maybe, for example, right? Can I do a little side business with my passion or something that I'm good at or gifted at, maybe on the side? And now I've created a business on the side. And the fact that I've created a business unlocks a whole world of opportunities because now I earn an income in what I do primarily, but in my side business, I'm now a business owner. I'm small business. And America's whole system is set up to encourage that. And now I can shift some personal expenses, maybe move them over appropriately into that category of being a business expense because I've unlocked that. And I think for me, it's like unlocking doors, right? We all get better. I'm still learning. You're still learning. What's another door that I can unlock? What do I not know is out there as an opportunity? And probably every year I learn new opportunities just by asking people and by listening and by paying attention that somebody else has figured out. Oh, here's another incentive that's out there. And I'm like, I never thought of that. So some of it too is just hanging out with the right people, hanging out in the right communities where people are talking about these types of things. I'm sure you've experienced that in your circles. You hang out with people that are looking to make more money and get ahead and keep more of what they make. And just out of conversation, you get ideas, just talking about things at lunch or over a cup of coffee that you never would have figured out on your own, or maybe would have had a long time before you track them down.
I love that. All right, so Scott, why don't you walk us through some of the framework, some of the discussions? Like it's getting to the end of the year, depending on when someone listens to this. What are some of the things that I can do right now? If I came to you and said, Scott, look, you're a smart guy. You've been to Congress. You've been part of the tax game now for the better part of 40 years. What are some of the things that I could do right now, whether I'm W-2, whether I'm 1099? How can I lower my taxes that I have to pay today? And then I want to circle back to Congress incentivizing behavior and just get your view on long-term taxes versus short-term taxes, income taxes today versus income taxes tomorrow.
I think a great place to start, and I think it fits in well with the passive income machine, would be look at maybe buying your first rental property. That can create a rental property business. Just by purchasing a piece of real estate, it unlocks incentives that are associated with real estate. Things like depreciation and tax deductions, deducting insurance and taxes and all of the costs. But that also allows you now, just one property allows you now to shift over. Now you're in the business of owning real estate. And one rental property unlocks that, right? And that's just the start. But I think that's something that it's a big wealth creator. Historically, Ryan, something like 90% of all millionaires made their wealth with real estate. So if you want a strategy, and what's beautiful about that is it's something that you can control, right? We can look at our alternatives. Blindly investing through a mutual fund or the stock market that I have no control over versus finding a property in a market where somebody's going to be paying me rental income that pretty much covers the expenses, and maybe I make a few dollars in cash flow, and I get the benefit of appreciation. So now I've shifted from giving up control through traditional investing, and I moved over to taking control and owning one asset, right? And that's just the beginning. As you know, people go well beyond that. But that would be step number one.
Let me ask you a question on this. You said that Congress is trying to incentivize behavior. They're using the tax code to incentivize behavior. There's very little permanent tax benefits with stock market investing. You can defer and kind of choose when you pay your tax, but there's very little tax benefits associated with stock market investing. Whereas with real estate, there's a plethora of stock market or a plethora of tax benefits. If we just take the viewpoint from Congress, are they not trying to encourage people to invest in the stock market and invest in real estate instead? Like what's the drive behind that from the IRS?
I would say they absolutely are trying to encourage investment in real estate, to rehabilitate, to fix up properties, to build new properties. Hands down, that's for sure an outcome that they want. They want to encourage development of real estate because we all need places to live. We need places to work. We need manufacturing. Give you an example in the tax code. There's something now for the next 4 years that's encouraging the production of new manufacturing in the United States, brand new in the tax code. And then what's that going to do? We develop manufacturing, but think of what comes with that. Jobs come. Somebody's going to work in that plant. And then when you have jobs, you're going to get spin-off industries that would help support that manufacturing, right? So if you've got a plant that employs 1,000 people, they're going to need some ancillary businesses around it. So it creates a whole economic engine. And I think that's what Congress' intent is, right? They want to encourage these types of things. So That's a manufacturing building. Now that's out of my price range. I can't afford that, but I can afford a home in the Midwest for, somewhere between 130 to 170,000. That's within reach of a lot of Americans. A lot of people can save up and get into their first rental property like that.
You know what? I think that's a really, man, this is fascinating as we're talking about this. Let me ask you a further follow-up question on this. The interesting part about investing in real estate is, let's assume that Congress is incentivized to drive, to drive the economic GDP through the conversation of real estate. Then let's also kind of come back to this idea of Congress incentivizing behavior. Okay, let's use the 401k or the IRA or the tax deferral to get people to put money into the stock market. Now, as we've been talking, I think this confirmed maybe an opinion that I have, and whether it's true or not, I want to kind of flesh this out with you. I think the original desire or drive of a tax deferral was actually to drive responsibility. It was to help people transition from pension plans back in the 70s and 80s to a defined contribution plan, and that was done with a tax incentive to say, hey, put money in. Don't pay taxes today. Let the stock market grow your wealth, and tomorrow you'll have enough money, and you'll probably retire in a lower tax bracket. I think the math, the life expectancy, the Social Security, all of the things that were working then, they're not necessarily working today. And whether or not they just need to update their thinking, or whether or not there's a nefarious design behind it, let's just assume for just a moment, Scott. I was just running some numbers here. Let's say that today I put $20,000 in a 401k, and between state taxes and federal taxes, that would give me about a $6,000 tax deduction today. So, right around there. I'd not pay $6,000 in taxes. My CPA would come and say, hey, I saved you money. And if we're really assuming Congress is on our side, they're trying to get us to save for the future, okay? They're trying to get us to save for the future. And if that $20,000 over 30 years compounds at 8%, I'm going to have a little bit north of $200,000 in that, tax deferred account 30 years from now. Okay, so take out any future contributions, just that one $20,000. I could have paid taxes on it today, and then try to do something to eliminate my taxes in the future. But now I've put it in a tax deferred account. And if I fast forward myself now to 60 or 65, and I look at that $200,000, how much of that $200,000 is actually mine? And what did Congress, whether they did it intentionally or not, what did Congress just set themselves up to be able to profit on based on this incentive? Is it aligned or is it misaligned? Give me your thoughts on this.
Well, at the end of the day, you're going to look at that statement balance of 200,000, and you think, oh, I've got 200 grand in my account. But you've had this silent partner with you the whole way, right? The government now, because you deferred that, right? You got a tax break back when you put it in, but they're now a partner. Now it's time to pay the piper, and what they get to do is they get taxes on the growth of it. So it's actually, from the government's perspective, it's not a bad deal for them, is it, right? They had that money grow because you put it in, and now the government is going to get that bigger windfall in the future, because as you start drawing it down, you now have to pay taxes on it, and you're paying taxes, kind of call it on the harvest, not the seed. The harvest of all that compounding is 200,000. The government's going to get a chunk of that. Let's say 25-30% of that. That's a pretty good deal for the government, isn't it?
That's what I'm trying to flesh out here. Is it really for the people by the people, or is it really for them by them? Because at the end of the day, if that all is true, and let's just assume everyone has good intents, right? We all have good intentions across the board. In retirement, I'm going to likely lose the majority of my standard tax deductions. My kids are gone. Maybe I'm charitable contributing, but I'm not putting money into an IRA. My home hopefully is paid off, if I'm going to try to retire. So all the things that I was deducting, I no longer can. And just to make this as dramatic as necessary to prove a point, if I took all $200,000 out all at once, assuming tax rates don't change, which is a major if I'm in a 30% tax bracket, I owe the IRS $60,000. I deferred 6 to pay 60. And that's crazy. I mean, I took all the risk, I put in all the money, I did all the work, I sacrificed all the time, but they're getting a big chunk of my retirement. And so I know we didn't start this conversation with that intention, but as we were talking, I'm just thinking, who's pulling the strings here? Who's pulling the strings, and what are they actually doing? Because at the end of the day, I think the intention is sound, that we want people to save for their retirement. Otherwise, the problems are going to be massively bigger. How do we support an aging population that can't work anymore? Who's going to take care of them? How does a smaller working population fund a massive Social Security liability? I mean, there's so many different challenges with the conversation of retirement. But now, when we look at the deferred taxation challenge, that just complicates the entire problem. And if there is a nefarious intent in place, well done. Well done. They've convinced everyone that wants to save for the future to defer their taxes, which means IRS and future taxation is participating on everyone's risk that they're taking in the markets.
Yep, absolutely. And you were very generous, Ryan, by saying a 30%. If you look at kind of the future and what we got going on, I think it's probably overly generous to say the taxes will be as low as they are now. If you just look at the math and you look at what we're spending and what we're bringing in, I think most people, to kind of pay for things with all of the liabilities, mathematically, taxes are going to have to go up somewhere. I don't know when or where or how much, but I don't see that these current rates, the math doesn't work. We've got an outflow of a lot, and we have an inflow that's less than the outflow, and at a certain time, you're going to have to kind of equalize that gap, and there's only two ways to do it. You can knock down spending, which personally I'd love. You'd probably be in favor of that, but government really isn't great at reducing spending.
What do you mean? What about Doge? I mean, they had these big dreams, and then Donald Trump punched Elon in the face or something. I don't know.
they started off strong, and they knocked out a few things, but their goal was to knock out what, $2 trillion.
Yeah, they didn't get close.
They didn't get close. They didn't get close to it. So the only other lever then is to bring in more revenue, right? And so the only two ways to do that is either have people earn a lot more and produce a lot more, and keep the tax rate the same, or increase the tax rate. And we're growing our production a little bit and our productivity, but to me the more likely one is over time we're going to see higher tax rates, and we'll see higher tax rates start at the top, and then just like taxes did, as we talked about at the beginning, they start at the top and those higher tax rates work their way down. And that's just seems to be the way that it works. I don't see any big change. I don't know if that's nefarious. It's probably just math. They're back there and they got to plug the equation, and they got money going out, and they have to find a way to get money coming in to offset that. So it's a math equation. It's not that complicated.
Well, and that's why I come back to, they are either really stupid because they don't understand math, or they're really smart and they're keeping us in the dark. So whatever way we want to look at this, I think, Scott, let's do this. Let's turn this into a two-part series, because the next question I want to ask you on the tax code is, I want to talk a little bit more about what we can do, because if we really come down to, we've got the one form of tax that we have control over is our income tax, if that's what you're saying. Now we can also take that control and we can choose when and how we pay our income tax. Do we pay it today? Do we pay it tomorrow? If we do pay it today, how do we lower our income tax today? If we don't want to pay income tax tomorrow, what are some of the things that we can do to take future income, passive income, retirement income in a more tax-advantaged way? And so join us on the next episode, because on the next episode, we're going to unpack this conversation of, you, my friends, have complete control over the one tax that actually matters, your income tax. When you pay it, how you pay it, and how much you're going to pay is well within your control. And the IRS, they've laid out the playbook for you to lower your taxes. And if we do want to believe there's a positive side to all of this, then the IRS, if you're willing to put the effort in, the time in, and the investment in, when I say investment, financial IQ, then you can actually keep more of your money. And in my opinion, Scott, keeping more of your money is keeping more of your life. That's time that I would have otherwise spent working for money so I could pay my taxes. If I don't have to pay taxes, that's time now that I get back to do the things that I would otherwise want to do if I wasn't spending my time trading it for taxes. So, Scott, let's open up part number 2 on the next episode. You down for that?
Sounds great.
All right, my friends, that's a wrap for today. If you're serious, though, about turning everything we talked about into your new reality, there's only one place you need to be. It's the How to Retire in 10 Years Summit. This is your chance to learn exactly how to unlock financial freedom and build passive income in 2025. Early registration is live right now with an exclusive bonus for our early action takers. Don't miss out. Head to the link in the show notes, or just head on over to retireintenyears.com, and I'll catch you at the summit.